Welcome to the Silverbridge CPA's Summer Speaker Series. We hope you enjoy this message.
Thank you for joining our Silverbridge CPA Summer Speaker Series. My name is Brittany, and I'm the firm administrator here. We are very fortunate to have C.G. Hinrichsen, Realtor with Coldwell banker Tomlinson, and Owen Glodt, president of Realtor 1031 Services and TitleOne Exchange, here with us today, sharing their knowledge on today's real estate market and how to utilize a 1031 exchange in this market. I'll introduce them shortly, but just a few items to go over first. If you haven't already, can you please mute yourself? You can do so by clicking the microphone in the upper right-hand corner. This presentation is being recorded, so if you do not want to be in it, please turn your camera off now. And then the way we're going to do questions is that you, throughout the presentation, you're welcome to type them into the chat feature, which is also seen up in the top right, the little bubble. And if you hover over it, it says chat, and you can just type your questions in as they come up. And then at the end of each presentation, we'll go through that chat, and I can kind of moderate that, and we'll go through your questions. And then Owen will present, and we'll go through questions for Owen as well. And if we have time at the end, we can open it up to everybody. And at the end, I'll let you know, but you can unmute yourself and just ask questions without having to type it into the chat feature. And with that said, I'll go ahead and introduce our speakers. CG hails from Denver, Colorado, and went to Concordia University in River Forest, Illinois. CG has lived in the Boise Valley for 33 years. After a very successful customer service career with a major corporation in the Valley, CG then transitioned into real estate. CG's mission statement is to exercise passionate professionalism in assisting our clients realize as much equity as possible in the sale or purchase of their home. CG's business model is client-centric, discovering our clients' real estate goals, collaborating on how to achieve the client's goals, creating a positive real estate experience for our clientele. The choice of pursuing further education, attaining ABR designation, which is Accredited Buyers Representative, and GRI, Graduate Real Estate Institute, confirms CG's commitment to professional excellence. And as previously stated, Owen is president of Realtor 1031 Services and TitleOne Exchange. Owen oversees all operations across the TitleOne Exchange brand and leads developing business across the United States. With a background and degree in finance, economics, and accounting, he guides clients through the 1031 exchange process and helps ensure a good experience throughout. Owen joined TitleOne in 2016 and is dedicated to creating raving fans and helping taxpayers defer their long-term capital gains taxes through the use of the 1031 exchange. And with that, I will go ahead and turn it over to CG.
All right. Hi, everyone. Thank you for joining us today. We're going to review what is happening in the market in the Treasure Valley at this time. But first, I want to start with a little bit of humor. I've got a little video I'm going to share with you, so take a look. All right. Well, there you have it. That was our market last year, 2021. It was a feeding frenzy with interest rates at 2.5 and inventory very low. Properties were on the market for less than 5 days. All right. So this is a snapshot of May. Our first line refers to the median price point per county. So in Ada County, the median in the middle, right, not the average, but the middle price point was $602,250 for May. And in Canyon County, it's $459,995. So you can tell there, in Ada County at least, we are still riding the crest of that inflated price trend from 2021. Truth be known, Canyon County is stabilizing because last month the price point was $475. So it's actually down 3.5%. So we're seeing a little bit starting to happen of stabilization. As far as listings are concerned, in May we had 1,520 listings in Ada County. In Canyon County, 856. So that's an increase of 53% in Ada County and 43% in Canyon. This is real key, the days on market. So how long did it take to go from active to offer? 14 days in Ada County, 21 days in Canyon County. Very interesting because in 2021, they were going from active to having an offer on it in less than 5 days. And Owen is shaking his head yes. So he is in agreement with me. So it's the market is stabilizing. Then this last line refers to the number of solds in each county. 894 in Ada County, 496 in Canyon County. In Ada County, that's up almost 10% from April. Okay, so moving on now to our next slide. This reflects sold median price by city. I like to do this because that way you get an idea, okay, where I live in, say, Eagle, the median price is $980,000 for a home. Or let's say you live out in Middleton, the median price on the far right here is $555,000. You've got $580,000 for Boise, $573,000 for Meridian, $491 for Kuna, $749 for Star. And the further west you go, a little more reasonable the prices get, right? $451 for Nampa and $430 for Coldwell. So this is kind of a visual to, I'm going to say, confirm what we talked about in the first slide with median price. Okay, so now I'm going to show you in a graph, a line graph, the trends on listings, because the amount of inventory that we have reflects where the pricing is going to come in. So I want to draw your attention to the orange line. See how it drops severely. That is the year of 2020. That's COVID. That's what it did to the real estate market. The yellow line is 2022, where we're coming back. We're practically almost to the same level as pre-COVID. The blue line is 2019. So you can see we're recuperating from, I'm going to call it the dampering of the market by COVID. This gray line is last year. So we are already by far past up the 2021 listings level. That's Ada County. And now this will also confirm the same trend. You've got that steep decline there in 2020. You've got an incline on this year's listings for Ada County. So that tells me that we're recovering as far as listings are concerned. We're going to having more inventory on the market. That helps also stabilize the, I'm going to call it acceleration of the pricing. Okay, next slide that we've prepared for you today is a reflection of sales per unit for resale, which is blue line, and, oops, I'm sorry, beg your pardon, let's go back. Resale and new construction. So on the new construction in Ada County, we have 251 sales in May and 648 sales for resale in Ada County in May. You can see the trend there is pretty similar. I fully expect in both Ada County and Canyon County that the new builds will increase because it's the summer months. You've got June, July, August, September, and part of October to finish those builds. I expect that to come up. And again, that's more inventory that will help with keeping I'm going to say the market a little more stabilized. So part and parcel of my job in helping you, I'm going to say, realize the most gain for your property is also to advise you regarding how to sell your home and prepare your home so that you can make the most equity. And I'm going to share now, if I may, just 5 most common mistakes that sellers make. And the first one has to do with not having the home prepared before you go to market for the little things. Now, maybe the dog has scratched the door lintel, or maybe you've got a screen that needs to be replaced. A home inspection for $400 or $500 will help you ascertain what needs to be dealt with before you get there. And I do believe, based upon my experience, that helps you realize the most gain possible from selling your home. Another common mistake is not taking care of your curb appeal. And this is probably the least expensive part of preparing for market, is just making sure the front of the home is groomed. And you look, I'm going to say, you shine for online. When your buyer hits that curb, they're going to go, oh, wow, I really like this. This is nice. Another common mistake is clutter or not staging the home. I always highly recommend that we stage the home. And then the other thing is also being aware of maybe aromas in your home that you're used to, like maybe you used to smoke. That's a thought. Or maybe you've had kitties in the house. These things are remediable, but you need to be aware of it so that, again, when your buyer walks through that door, he or she is going to say, oh, I like this. There's nothing hindering me from purchasing this property. And then the final thing is, I'm going to say the trend to chase the market, meaning if there's 10 homes in your area for sale, where do you want to be? At the top, in the middle, or at the bottom? You don't want to position yourself so high that you keep making these price adjustments and it causes you to maybe get a little stigmatized in the marketplace. But that is where I come in to help you figure out how to get the most value for your dollar. And Owen is the person that will help you realize transferring your asset into maybe other investment properties without having a taxable event. So I'm going to stop presenting, and I think Brittany's going to ask for questions. Thank you.
Thank you, CG. It doesn't look like any questions were put into the chat. Somebody did ask if you guys would be receiving the recording of this, and you will. We got to do a few edits with it afterwards, but hoping to be able to send that out to everybody next week. But does anybody have any questions for CG that just didn't get put into the chat? Okay. All right, perfect. We can turn it to Owen, and again, we'll have time at the end of Owen's that we can open it up to both of them as well.
Well, thank you so much, Brittany, and thank you, CG, for a great presentation. Again, my name is Owen Glodt, and I'm the president of Realty 1031 Services, and then our local brand here in Idaho, TitleOne Exchange. And today, I really just want to talk to you about the 1031 Exchange. The very first thing that we're going to talk about is, what is a 1031 exchange? And it is actually derived from the Internal Revenue Code, section 1031. And it allows a real estate investor to actually defer their long-term capital gains taxes when selling a piece of real investment property and then purchasing a new piece of real investment property. It's important to know that it is a federal part of the tax code, and so it actually can apply to all states within the United States. It's something that we get the pleasure of working with people that have investment property. Even if they live in Idaho, they may have investment property on the East Coast or in Florida. It's really neat to work with different people and being able to see the different types of properties that they have across the country. So who can take advantage of the 1031 exchange? Well, this is a really interesting one because as long as you are a taxpayer or let's say someone that files taxes, you generally can take advantage of the 1031 exchange. If you are a single individual, a married couple filing jointly, an S Corp, a C Corp, regular LLC, all of those different entities can take advantage of the 1031 exchange. I'll share with you guys just real quick though, I get this call every single year, and I'm waiting for it some point this year, but one of them sticks out in particular to me. I had a gentleman give me a call and he said, I'm looking to do a 1031 exchange. He told me that he had actually inherited a piece of land about 20 years prior and is now appraised so much in value that he is ready to sell that and actually do a 1031 exchange with that bare piece of land. And so I start to go through really the 1031 exchange process, similar to what I'm going to go through with you guys here today. And he cuts me off and he says, Owen, stop. And I get silent on the phone. He says, you need to know 2 things about me before we start. And I said, okay, what are those? And he told me, thing number 1, he goes, I do not believe in paying taxes. And I kind of smiled on the other end of the phone. I thought to myself, well, that aligns with a lot of our clients. But the second thing he said, it really threw me off. He said, oh, and the second thing you need to know about me is I have never filed a tax return in my entire life. And at that point, I'm on the phone. And to be honest with you, for me, it felt like I was silent on the other line for probably 30 minutes. In reality, it was probably 30 seconds. But I finally, at the very end, came out of it and said, well, if you don't believe in paying taxes, and you don't believe in filing taxes, potentially the 1031 exchange isn't the right option for you. And that's just to keep in mind that as you do the 1031 exchange and as you complete it, as we go through this process, you will have to file a tax document. It's called an 8824 tax form, something that your Silverbridge CPA can go ahead and help you with. But it does help you indeed file the 1031 exchange, so that way you get that tax deferral treatment that the 1031 exchange offers. So there are some general requirements to do a 1031 exchange. I've already mentioned that it has to be real property and it has to be investment property. So unfortunately, we cannot do a 1031 exchange with a primary residence or let's say a second home or even a vacation home that you're spending an entire season there. It does indeed have to be investment property. And there's a like-kind clause within the 1031 exchange. In addition to that, we have a general requirement really that the 1031 exchange is much more beneficial than a sale depending on your circumstances, and we'll cover that as well here moving forward. And then the last point I'm going to talk about is your property for really qualified use? And again, that's really just touching on, is it investment property, is it real property? So the first thing I want to touch on is within the 1031 exchange code, there is a like-kind clause. And really what that means is in order to do a 1031 exchange, the property that you're selling a deed has to be investment property, or as the code puts it, a property held for productive use in trade or business. And other than that, however, as long as it's real property and investment property, the type of real investment property is inconsequential. So what that means is you could sell, let's say, an apartment building or industrial, agriculture, and commercial, and you could actually reinvest using the 1031 exchange into like residential rentals. You could go into a retail space, raw land, or even office buildings. So you can sell any type of property within these graphics here, and you can actually purchase into a different type of property as long as it's investment property and it's real property. So why exchange? And this is really going to the doing a 1031 exchange versus just a straight sale. The first reason you would do a 1031 exchange is to essentially just relocate your assets. We see that a lot or very often within the Treasure Valley where someone may have a piece of property that they own in an older neighborhood. Maybe it's part of the Central Bench or the North End that just has a lot of maintenance work. And they would like to go ahead and move that rental piece of property, let's say to a newer subdivision out in Meridian, maybe even south of Overland, and they'll go ahead and look to do a 1031 exchange in order to get a newer property that may create more rental income, have a better rate of return on their investments, and it will help them really justify owning that rental piece of property. I'll tell you that we also have a lot of people relocating from the state of California. And they're coming actually from the state of California up to, let's say, our Treasure Valley area, where they're looking at reinvesting in multiple pieces of property. I'll tell you another story. I had a woman come into our office, and it was just pretty much she just walked in and she just requested to meet with me. Of course, I met with her and she sat down, and she only took about 5 minutes of my time, but she told me that she would come back the very next day, and she had a property she was going to list that night. But she was so confident that she would get it sold overnight that she would come in the very next day to meet with me and talk about the 1031 exchange process. Of course, I agreed to meet with her the very next day, and sure enough, at the exact same time, she comes back into our office, and she said that overnight, she got over 20 offers on the piece of property that she was selling. Well, this is a true story and actually happened right before COVID, so it was right before all of the house prices went crazy, and she told me that she did not take the highest offer, but she took the offer that would close the quickest. She told me that she sold her piece of property, residential rental, for $1.8 million. And she was so excited about her listing, about her property, she actually brought the paper listing. And she slid it across the closing table over to me and said, take a look at this property. It's absolutely gorgeous. And I'm looking at this listing, and I'll tell you, it is a nice house, but it's 1,400 square feet. And as CG was mentioning, there was literally zero curbside appeal because they had an unfinished yard. And so overnight, without curbside appeal, she was able to get over 20 offers on this property and accepted one for $1.8 million. Well, as I'm looking closer at this listing, I'm realizing it's all about location for her because her property she sold was in San Jose, California. And even though it was technically within the San Jose zip code, it was actually closer to Cupertino, where the new Apple headquarters has been put up. And so it was actually a whole bunch of Apple employees that were bidding on her piece of property. And in addition to that, and this is what blew me away, in addition to that, her property was right by a freeway on-ramp. And apparently in San Jose, the traffic is so bad that if your property is next to a freeway on-ramp, it actually increases the property value. It blew me away. She was able to sell that piece of property and then move her investment properties into the Idaho market, where she actually bought 7 of them all cash. The next reason you would do the 1031 exchange, and this is really the foundational reason that people do 1031s, is to really defer the long-term capital gains taxes. In addition to long-term capital gains, you also get to defer some other sorts of taxes as well, including depreciation recapture and state tax. We also use 1031 exchanges commonly for estate planning purposes. A lot of people will go ahead and do 1031 exchanges over and over again, essentially putting it into a 1031 exchange chain until either their income levels are lower and potentially they have to pay less taxes, or there is different strategies that someone can use when pairing with perhaps your Silverbridge CPA or an estate planning attorney to look to defer those long-term capital gains taxes indefinitely. And then the last reason people may want to do a 1031 exchange is that they want to further financially leverage themselves. We see a lot of people sell one piece of property that maybe is all entirely paid off and they owe no money on the property they're selling, and they'll go ahead and sell that and purchase perhaps 4 properties, so with 25% down on each property. Increasing the amount of loans, of course, they have, but also potentially increasing the amount of income they can get from those properties. So as I mentioned, the 1031 exchange defers long-term capital gains taxes. It's one of its primary uses, but it does go ahead and also defer some other taxes as well. The long-term capital gains taxes on a federal level is for the most part either 15 or 20%. And then some state taxes can go up as high as 13.3%. And actually, that's an example of the California Franchise Tax Board state tax. The 1031 exchange will also allow you to defer your depreciation recapture. In most cases, it's a 25% depreciation recapture rate for the amount of depreciation that you've taken over the property's time of ownership. And then if you make, for example, more than, let's say, $250,000 for a married couple filing jointly, you may have to pay a 3.8 net investment income tax on top of these other taxes that we show up here on the board. And so for my client that sold that piece of property in San Jose and then moved into the Idaho market, she was really deferring quite a bit of taxes. In her case, it was about 37% that she was deferring coming from that state of California. So in order to start the 1031 exchange, we've really broken it down into 3 separate steps. And this first step is what we call the pre-exchange period. This is the time really to figure out if the 1031 exchange is right for you. Identify a subject matter expert or a 1031 exchange company. We would be happy to guide you through this pre-exchange period and really just figure out what that process looks like, what it looks like specific for your scenario. We want to make sure as TitleOne Exchange that we're getting you into a position where it makes sense for you to actually do a 1031 exchange. So we're going to ask you different questions like what kind of property it is that you're selling, how long have you owned it, how is that property being used, and we really are going to take in all of this information and then just have a conversation with you, collaborate with you to make sure that that 1031 exchange is really the right option. The next step is the identification process, and this really comes into play after the pre-exchange period. Once you're talking with your 1031 exchange accommodator, at that point, you're going to get, let's say, under contract for the piece of property that's being sold. At that point, that contract goes to, let's say, your title and escrow company. And at closing, once that sale closes and records is when this identification period begins. So once the sale closes and records, we as, let's say, TitleOne Exchange would receive the proceeds from the sale. And then you have some timelines to abide by. And this identification period is the most crucial timeline. Once the sale closes and records, you will have just 45 calendar days to identify which property or properties you may want to purchase with the 1031 exchange. The reason that this identification timeline is just so crucial is because you only have 45 calendar days. It does go quickly. But on day 46, you become locked into your nominations, and you are required to actually purchase a piece of property that has been previously identified. So if we hit day 50 and a perfect property comes up on the market, unfortunately, we cannot use it to purchase with the 1031 exchange fund if that property wasn't identified prior. This is a perfect time to really pair with like CG or your agent and really have them help you identify properties that meet your criteria of, let's say, location or a size of property, the amounts of bedrooms and bathrooms, location. CG will be able to help you a ton, be able to drill down on the perfect property, get offers in, and make sure that you're in a good spot so that way this identification process is made easy for you. And then the last part of the timeline here is really just the full exchange period. So I mentioned once your sale closes and records, you have 45 days to identify which property or properties you may want to purchase. And then on day 46, you are locked in those nominations. After day 45, you have an additional 135 days, however, to actually close on the identified property or properties. And in this part of the process, we are working again for you, and we're just going ahead and contacting the title and escrow company you're using for this side of the purchase. And we're going to coordinate with them to make sure that the 1031 exchange is intact on the purchase end. And then also, of course, that the funds that we're holding that resulted from the sale get applied to the purchase so you can go ahead and close in a timely manner. So we have a number of different types of 1031 exchanges. And everything that I've really been talking about in context today has been through the lens of a forward exchange. In a forward 1031 exchange, this is really the most common. I would say 95, 96% of 1031 exchanges are what we call these forward exchanges. But it's when you sell a piece of property at some point in time, you go through the timelines of the identification process, the full exchange processing period, and eventually you're purchasing your new replacement property sometime in the future. Again, this forward exchange is really where most of the 1031 exchanges lie in, and we would be happy to guide you through that forward exchange process. The next two types of exchanges, I'm going to put on the screen at the same time here. The next two types of exchanges are much more complex. And I'll actually preface this with the fact that really, if you're doing any sort of 1031 exchange, although we will be guiding you through the process, we always recommend that you bring on your CPA as well to the transaction. It is so important for your CPA to be involved, just as they'll be able to know your entire tax profile, your entire investment profile, versus us being able to see just into a small window of what it is that you're doing. And so this is even more important for the reverse exchange and improvement exchange. We call these two types of 1031 exchanges parking exchanges. And the reason we call these two parking exchanges is because we, as the 1031 exchange accommodator, actually are required to go into title for a piece of property that is being purchased. In the reverse exchange, we go ahead and we actually use the 1031 exchange to allow you as the real estate investor to actually purchase a piece of property before you sell a piece of property. Versus in the forward exchange, we're selling and then we're purchasing. In the reverse exchange, we get to purchase before we sell. However, in the reverse exchange, we as the 1031 exchange accommodator actually have to go into title for the piece of property that's being purchased. And then in the improvement exchange, this will allow a taxpayer to actually use their 1031 exchange funds to buy, let's say, like a piece of land, and then use those remaining 1031 exchange funds or additional funds to build vertically on the land, having that entire value count towards the 1031 exchange. Again, these are big, complex types of 1031 exchanges. If you're looking at potentially looking into doing the reverse exchange or the improvement exchange, please feel free to reach out to your Silverbridge CPA or to TitleOne Exchange or CG, and we'll make sure to point you in the right direction. So with that, I just wanted to give you a real bird's eye view of the 1031 exchange. I'm going to go ahead, and this is CG's information. We would love to hear from you. If you have any questions, as we just had a small window of time here today to really talk about our two subjects, please feel free to reach out to either of us, but I do have CG's information here on the screen for you. Take a second to go ahead and jot it down, and with that, I believe we're going to go ahead and open it up for some questions.
Awesome. Thank you, Owen. That was super informative. Again, there are no questions that were in the chat, so we'll just open it up at this time to anybody who wants to ask anything. Please don't be shy. No questions, a stupid question, so ask away.
While people are thinking, oh, go ahead.
If you were going to say something, go ahead. I can ask it after you're done.
Sure. So all I was going to say is last time we did this, especially within this kind of Boise area or within Idaho, there's been a lot of questions on, can you do like a 1031 exchange on a mixed use asset? And what I mean by that is, let's say that you own a duplex and you live in one section, and for example, let's say you rent out unit B. The big question is, can you do the 1031 exchange on that? The answer to that is, of course, yes, you can. However, you can only do the 1031 exchange on the investment portion of that duplex in my example. And then if you sold the entire duplex, you would also be potentially able to take advantage of a primary residence exception coming from the tax code as well, section 121, that may allow you to exclude gain from your primary residence unit. Go ahead though. How can we help you?
I had a complex question with respect to a property that was put into a trust and is being sold and distributed to the members. Anyways, is that some type of investment that could be used as a 1031 exchange if it is already going through multiple stages?
Yeah, that's a great question, and yeah, multi-layered. It really depends. Well, and let me ask one clarifying question. In your example, are they actually selling the piece of property, or are they just essentially distributing the assets from the trust?
In this instance, it was an inheritance, so they're selling the property in order to distribute the assets that property sold for.
Got it. Okay. Yeah, so the trust, and also a good example is like if you had a partnership LLC. If you were to go ahead and inherit a piece of property, there is a chance that the heirs can get something called a stepped up basis. And this is quickly or rapidly leaving, let's say, my subject matter expertise and going really into where you would talk to a Silverbridge CPA. But that stepped up basis, just to give you kind of a general look at it, when you inherit a piece of property that has been, let's say, that's been left for you, you can get something called a stepped up basis, which would increase the value of that property at the time of passing to what it's worth at fair market value at that time. And so if you were to sell that piece of property, let's say, you may not have any long-term capital gains taxes. But it gets a little bit more complex when it's inside of an entity. And whether or not that applies, again, you'll have to make sure you talk with your tax expert. But when you have a property within an entity like a trust or a partnership LLC, and you have multiple partners or trustees, and let's say some of them would like to do the 1031 and some of them would like not to do the 1031 exchange, you can do something called a drop and swap, just a term that's coined by the 1031 exchange. And it essentially allows you to drop it out of that singular entity, either the LLC or the trust, into the different membership interests. And then each owner, let's say it's 4 owners at 25%, each owner can choose to do whatever they would like with that property. They could sell it and do a 1031 exchange, or they could sell it and take the cash and do whatever they'd like with it at that point. It generally requires an extra level of deeding, and then also comes with a little bit of calculated risk. What I didn't mention within our presentation here today is that in order to do a 1031 exchange, the IRS does technically put a holding period requirement, let's say within the amount of time you've held a piece of property in order to do a 1031 exchange. And there's a safe harbor that's outlined by the IRS saying that if you've held the property for at least 2 years, you could go ahead and do a 1031 exchange. And then make sure you're talking with your tax expert, because we work with a lot of people that may tell you that you only need to hold the property up to 1 year before doing the 1031 exchange. And even though the code doesn't explicitly give you the timeline of how long you have to hold the property, if it is held less than a year, it's pretty universally thought that it could not go into a 1031. So circling back around, when you do the drop and swap, when you drop it out of the LLC entity or the trust entity into your individual interests and sell that property from your individual interest, there's an argument against you that you've only held the property for, let's say, up to a couple days or 10 minutes even before that sale actually occurs. So small calculated risk there. It does happen often. But certainly, to answer your question fully, you are able to generally do something with that.
Thank you. Can you say what was the step up, the full?
Yeah, the stepped up basis. It's called
Thank you.
stepped
Thank you.
basis.
Stepped up. Okay. Cool, great question. A question did pop into the chat. I think this one's mostly aimed at CG. What's your forecast for the housing market in the Treasure Valley? You got you're muted. Here, let's see.
There.
There you go. Okay.
Okay. Sorry about that. That's
Okay.
a really good question, Chandra. Based upon the data that I shared with the audience today, I feel it is stabilizing. Again, in Ada County, the price point went up from $595 to $602. That's a 1.3% increase instead of what we were seeing last year at 3 to 5% per month. So it's not, I'm going to say rapidly increasing. It's kind of slowing down in Ada County. And likewise in Canyon County, it has stabilized. Last month it was $475 as a median price point. This month it's $459. So I don't have a crystal ball, and I don't know what's going to happen next month, but I do know interest rates went up over 6% today. That's a factor.
Okay.
We are having more listings hit the market. That's a factor. And I do, again, I'm going to reiterate, the new construction market is ramping up because the weather's better. So we're going to have more inventory. That's going to dilute the market a little bit. I personally would like to see it stabilize. Just because it's just really hard for young people in the valley to be able to afford housing. It's like those who are on this economy's wages, not remote workers, right? It takes 42% of their income to be able to purchase, which is a burden. the NAR website says you shouldn't go over 30% of your income for housing. So it needs to correct. I feel it is stabilizing. I don't think it's going to dive, but I do feel it's maybe from going from a full rolling boil, like to use a canning term, maybe a simmer.
Okay,
Thank you.
let's fingers crossed. I have a couple of questions, and then if anybody else we still have a couple minutes. Owen, I guess it's a two-part question. Do the tax laws around a 1031 exchange ever change? Like, is it always set the way it is, or could you expect 2 years from now some of those rules to be different? And number two, if you did do a 1031 exchange, could a family member purchase the replacement property? Like, are there rules around, your spouse doing, like, if you did it in your name, but your spouse, you get what I'm saying?
Yeah, both are
Okay.
phenomenal questions. Thank you so
Okay.
much.
Yeah.
To hit your first question first, though, the 1031 exchange always, especially me, I feel like I'm a little bit hypersensitive to it, but the 1031 exchange is always being looked at to be changed a little bit within the tax code. And part of that is the tax bracket. So technically right now there is a 0% tax bracket, a 15 and a 20% federal long-term capital gains tax bracket. And those can always change, or the amounts of funds that it takes to get into one tax bracket to the next could change.
Okay.
The big things though that have been coming up in the news, let's say within the last couple of years, is that currently there's not a cap on how much you can defer using the 1031 exchange, let's say year over year. And that has been something that has been in discussion. The stepped up basis that I mentioned has also been in discussion if they want to go ahead and lessen that impact. And then they also have talked about just increasing the tax rates in general. I think at one point it was rumored to go up to about 39.6% being your highest tax bracket.
Okay.
But we're extremely in tune to that. And as I'm sure you guessed, there's a lot of people that are in favor of that, but there's also a lot of people that are pushing against that quite a bit, which is the main reason we haven't seen much of a shift yet.
Okay.
And then the second question, you're referring to what we would refer to as a related parties transaction. And if you are a married couple filing jointly, unfortunately, you cannot do a 1031 exchange at all by purchasing from your spouse. However, what if you are wanting to purchase or sell to your parents or to your siblings?
Mhm.
The IRS would also consider that a related parties transaction. And related parties transactions are strongly discouraged, I would say, by the IRS due to some tax fraud or tax evasion that can happen around that.
Yep.
And then in addition to that, it's important to know for the people on the call, when you do file that 8824 tax form to file the 1031, you actually have to mark on that form whether or not you did a 1031 exchange with a related party. And if you do, then you check that form, and although probably yet to be proved, rumor has it that increases your odds of being audited.
Got it. I figured that would be something along those lines.
Yeah.
Perfect. Thank you. Are there any other questions before we close it out? All right. Well, thank you everybody very much for joining us, and thank you to CG and Owen for your time and expertise. We really, really appreciate it.
Yeah, thank you, everyone.
If anybody ends up coming up with other questions, feel free to email Silverbridge or Owen and CG directly. All right. Thank you.
Thank you, guys. Bye-bye now.
Bye.
Thank you for watching this summer speaker series. If you would like to tune in to future presentations or connect with this speaker or Silverbridge CPAs, please visit us online at silverbridgecpas.com.